What is going on, beautiful people? It's Joe, aka the Nomad Investor, where dividends freedom anywhere is the goal. And today we have another portfolio update as well as some sad news. You guys read correctly. It's not clickbait whatsoever. I did sell all of my positions. I sold my whole entire portfolio at a loss. And I'll be diving into why exactly and what my future plans are for this journey, because I'm not giving up, and the YouTube channel as a whole. So without further ado, if you are new here, if you could smash that subscribe button, that would mean the world to me. It helps keep me motivated to continue making videos like these, and also smash that like button for everyone else, because that does help with the YouTube algorithm. So quickly diving into things, we are currently at 1,010 subscribers on the channel. So thank you so much to everybody who's partaken in that. And then we are at 37 videos. I'm currently filming the 38th video, which is also the 36th portfolio update. As always, the videos on this channel are for informational, entertainment, and educational purposes only. I am not a financial professional or advisor, and nothing here should be taken as financial, investment, or tax advice. Investing always carries risk, and those seeking financial advice should seek a registered professional. Now, if you have been following my journey, you know that I have this specific game plan and goal for growing my small portfolio from $0 to $1,000 per month in dividend income. I'm just going to quickly run through it, and then I'm going to explain what tweaks and changes I am planning on making. That way you guys can get an understanding, and then I'll cover the portfolio as well, and you guys can see what the current state of affairs is. So I have two sources of income currently. One is remote work income. It's pretty stable, pretty consistent. And the other is business income, which fluctuates up and down depending on the seasonality of things. And I have committed to contributing anywhere from $300 all the way to $1,000 plus per month into my Robinhood taxable brokerage. Now, my goal is to treat this brokerage like a business, aiming for 30% plus high yield annually. And I hope and aim to achieve that by investing into high yield income ETFs such as WPay, HOW, QDTE, XDTE, XPay, Blocks, and more. And I've committed to a max of 5 positions. This might end up getting changed to 6 potentially. We'll talk about that a little bit later. But I'm going to be alternating between anchors and satellite ETFs. This is part of the core satellite investing strategy, investing approach. There's actually a really solid video on this on Eugen Vasquez's channel, where he kind of dives in and breaks this down wonderfully. Or you can just kind of do your own research and do your own due diligence. That's totally fine too. Just giving that out there. I will be reinvesting the weekly and monthly dividends through manually dripping. For me personally, when you're investing into high yield income ETFs, you kind of want to avoid the traditional automatic drip strategy. And the reason why is because these ETFs perform very differently than traditional dividend growth stocks or dividend growth funds. So that's just something to keep in mind. But my personal approach is manual drip. You get the best value for your money. And so what I would do is just stack dividends to purchase whenever the market is down. And drip plus always compounding is the portfolio growth strategy. So I'm going to basically be rinse and repeating this until my account hits $1,000 a month in dividend income. And again, a disclaimer, none of this is financial advice. This is strictly for entertainment purposes only. I am some random dude on the internet. So don't copy me, don't follow me. And most importantly, I am just trying to share with you and document my personal journey. Now, real quick, here are my dividend income milestones while I'm growing my small portfolio. And this is so I can celebrate the small wins leading up to the bigger goal along the way. And previously, we have already achieved the first and second goal, and we were on track for achieving the third and the fourth goal. However, just because I sold my position, I'm not sure if these will be achievable. Possibly the third goal still, but I'm not sure about the fourth goal, to be honest. As I am reevaluating things and taking a look. But you guys can pause this if you want to see all the milestones leading up to the big goal along the way. Okay, so previously I've shared with you guys this, if you've watched some of my older videos, where I talk about my strategy for the bear market and stuff. And this kind of came about when I started to realize how risky my portfolio was at that time. And you know what? I totally predicted what ended up happening to my positions. So basically, I'm looking to diversify a bit and hold some different positions that are more focused on growth. But most importantly, I need to change these allocation percentages. This isn't the actual current plan that I'm thinking of doing anymore. I'm actually going to be changing my high yield income allocation percentage, and as well as my stable NAV index ETF and growth ETF percentage. So what I'm currently looking at is completely scrapping the growth ETF entirely allocation, and instead going a little bit more heavy on a stable NAV index ETF. And I think what I'll do is I'll kind of split that between two types of ETFs. One will be KQQQ. That's actually what I personally prefer. And I think that would really help with stabilizing my portfolio as a whole when we hit some like strong downturns. And the other one would probably be like, and by the way, KQQQ is a monthly pair. And then the other would be something like QDTE or XDTE, a weekly pay S&P 500 or NASDAQ index ETF. Something that's a little bit more stable because it's like covered call options versus something that's more leveraged. That is just currently kind of some of the ideas that I've had in my head. And then I am looking to actually get a position into bonds, but I still haven't decided if I actually will commit to doing that or not. The reason why is because of how things ended up playing out. But I just wanted to be transparent with you guys and share that I'm still really thinking about this. I'm still currently mapping out and planning, and I'll share a little bit more about that. But yeah, I just wanted you guys get this visual flow chart that I previously created. But again, there will be changes to this, and I will update you guys as soon as I do. But most importantly, I did want to let you guys know this journey is not over. I'm going to continue working towards getting this $1,000 a month in monthly income through dividends. The big thing that I'm currently reevaluating is rebalancing my portfolio, making sure that I am not too overly exposed to certain types of positions and funds, and most importantly, starting to really heavily invest into something that'll stabilize my portfolio. So I previously mentioned about like the core satellite investing strategy. However, when I started to really take a deep dive, especially yesterday during the markets, during pre-market, I came to the conclusion that I actually had broken the whole core investing strategy approach. That's kind of when I came to terms with like, oh snap, I really screwed up. Diving into the portfolio, this is what happened. So we actually lost about $1,200 or $1,200. So actually, you know, that's kind of the current state. So we would probably be closer to 6,700, somewhere around there, 6,600, 6,700 for the week. I was just bleeding. For the week, I was already like more than halfway of my goal I had lost in value in my portfolio. And you know, I had a threshold that I had set, and that was that if my account had dropped 15%, I would cut my losses and reevaluate and kind of basically wait for an opportunity to potentially re-enter. And this was only under certain conditions. I just personally was overexposed. And just for clarity's sake, I'm new to this whole dividend investing stuff. I've done my traditional 401ks and Roth IRA stuff and whatnot, but for personally doing this, especially when it comes to high yield income investing, this is completely new to me. I'm not an expert. I am not a professional. I am not someone who has so many years underneath my belt. I wasn't even invested in an individual investing account like this back during Liberation Day. The only experience that I truly have is some trading here and there when it comes to crypto. I've done pretty well with the crypto space, but outside of that, I have no experience doing this. This is my first time doing this. So, you know, I currently have $7,589.67 in margin that I could use. And then obviously I have my $5,538.27 in cash. So in total, my buying power is $13,127.94. I do have options here, and I think I'm really going to take some time this weekend to, number one, relax, and number two, replan everything. Just to be clear, I want it known, I have very high convictions in the underlyings of each of the positions that I was in. But as I always talk about, capital preservation comes at the utmost importance. Yes, I could have held the HOW, NVDW, and PLTW. I could have held all of those positions and waited to sell on Monday instead at still a loss. And then I would have obviously received the dividends. So this upcoming week of dividends, I won't receive anything. That was kind of the thing that was going on through my head. I was like, okay, I need to make a decision. Am I going to break my rule that I had set for myself and cut my losses and wait for an opportunity to buy back in at a much better value? Or am I going to hold through the worst of the worst and, you know, possibly lose even more? You know, I know some people have been losing like 30%. I know some people have lost 50%. I've been hearing so many different things, and it really depends on the funds that you're exposed to. Some people are in highly leveraged funds like 2, 3x. In my case, I'm only 1.2x exposure, but unfortunately for the round hill funds, and I've talked about this in previous videos, and I never blindly said that it's a perfect fund, but when the down is hitting, you are getting wrecked really badly. But I will say, guys, on Monday, I am pretty confident I'll probably get back into almost every single position that I was in, excluding NVDW, and that's because I think it's going to keep pumping leading into earnings, and then once earnings does like that sell-off, I think that's probably when I'll plan my re-entry. Just because I don't want to buy in higher than my original average cost. I want to quickly dive into the positions and show you guys. So as you can see, after hours, it did do a little bit of a rally for HOW, but to be honest, even with this rally, I was still so red, and a big part of that was how big of a portfolio allocation I had in this. And just to quickly show you guys, so if I hop over here, I had about a 24.68% portfolio allocation in HOW, and then a 48.54% allocation in WPay. Now, the bad part about that is, if we do the math, that's a little over 60% of my portfolio. 73.22%, correction. I just wanted to do the math there for you guys. So what happens is that negatively impacts my portfolio as a whole. In fact, NVDW was doing fairly okay. It wasn't actually down that bad. Neither was KQQQ, and Palantir was, it's a small percentage. It wasn't really like doing great yet, but that was okay. I was planning on just like DCAing down, and I still plan on getting back into this position again. But I just wanted to make it clear, like, these two positions are really what was killing and draining my portfolio. And that is kind of where I have to reevaluate what allocations do I want to do. And, I'll kind of cover this later, but I'm focusing on some new numbers here and try to figure out what can I do to better protect my capital, preserve my capital, but also help myself to be in a position where I'm still earning the income that I want to earn on this journey. So anyways, this is significantly below my average cost per share. Like, if we hop over here into my dividend sheet, and I left this just so I can review this, guys. It's not, obviously this was going to change. I do need to update this once I re-enter. But for now, I'm just kind of keeping a close eye on this. This is helping me keep an idea of where the market is and how my total return and market return would be if I were still holding. My average cost per share for HOW was $64.03. In market return, I'd be down, as of the market close yesterday, negative 8.5%. That's pretty significant. And then again, including just WPay, that's a negative 7.57%. And with WPay, I was a little bit closer to where it's currently hovering at. So it's at $48.28, but still I'd be taking quite a beating because, again, I'm down market return, negative 7.57%. And you might look and say, well, your total return still looks good. But again, I reached a certain capital loss threshold that I needed to make sure that I didn't take any more risk regarding that. My bad, guys. I got distracted. It started raining out of nowhere. I needed to protect my capital. I needed to preserve my capital. I love all of these positions. I have nothing against them. They are just leverage positions. There's no protection on the downside. So I get 1.2x on the upside, and I get 1.2x on the downside. So through the good and bad. And again, I plan on getting back into these, but I just need to change my allocation percentage. I think once I do that and can tweak it, I think that could help cushion things and make it a lot stronger. But for PLTW, it's $40.74. So this one is nothing crazy again. NVDW is at $46.75. So this one, if I held, is actually be in the green. But I know earnings is coming on Wednesday, and I just really wanted to completely liquidate my whole entire portfolio and see how things are going. And then KQQQ, it's just only a little bit above what my average cost was. So my average cost was $28.88, and you can see that here. This is at $20.94. So, again, this is not terrible, but yeah, I really needed to evaluate. I really needed to consider things. And I also was using margin on a lot of these leverage positions. And that's also like something that really impacted my decision. I need to get more strategic with this. I need to plan this out better, and I need to figure out what my allocations are going to be. What did I learn from all this? How can I better protect my positions? Should we enter into a downturn? And set some new rules for the portfolio. If you guys have any suggestions of what I should do differently moving forward with my high yield income investing strategy, comment them down below. I'd love to hear them. I'm always open to feedback, suggestions, and stuff like that. So yeah, I appreciate it. Hopping into X, if you guys aren't following me on X already, make sure to smash that follow button. I'd really appreciate it. My account is at I'm Nomad Investor. Again, it's at I'm Nomad Investor. And on here, I post live updates. I even posted when I sold my whole portfolio. And I just like to share my thoughts, opinions, and even like when I'm buying things as well on here live. So yeah, follow me at I'm Nomad Investor. Now, this is some interesting news, guys. This is from High Yield Hustle. He said ULTY will split 1 for 10. And this is after an announcement that YieldMax filed for reverse splits on 12 ETFs this evening. So this is pretty insane. YieldMax finally is doing it. Let's see what's going to happen. And it's obviously for more than just ULTY. So yeah, I mean, this is going to be very interesting to see how this plays out. I'm not sure how this will impact people's capital in the short term, let alone the long term. But to be honest, I don't see this really recovering at all. I don't think distributions are going to go back to what they were before, and that just wouldn't even make sense. And I'm very curious if they're doing a 1 for 10 split, how this is going to exactly work. So I'm going to definitely keep an eye on what ULTY ends up doing, and YieldMax with their other funds as well. Next, this is from the White House on X. It says the Trump effect. Google is investing $40 billion in Texas AI infrastructure, creating thousands of American jobs, training college students and apprentices, and boosting affordable energy statewide. America First is delivering big wins. So this is very huge news. I would think that this is probably going to impact Google in a positive way, and this might be something to consider. Actually, a sleeper weekly pay ETF, in my personal opinion, has always been GOOW. It doesn't really pay the highest in dividends compared to some of the other funds, but it does relatively well. So like, even if we look at the past week, as you can see, you know, my HOW was down so bad, but this was up actually 0.21%. And if we look for the month, it's up 11.95%. I can't say the same for HOW. Or there's also a post here from Beat the Bots. He said 15 income ETFs that finished the week green. Honestly, these first two are inverses, so I'm not surprised to finish green. Actually, someone in the comments section in my last video recommended that I start a position in winter. This is also a good defensive play in my opinion. I don't think I would have more than a 5% allocation in a position like this, but I personally would not want to have any margin invested into something like this. And that's why I personally didn't purchase any winter shares when I still was holding all of my positions yesterday before I sold. I could have done it and I could have been up and it could have like offset some of the losses, but I'd also need a big enough allocation into it, and I would for sure have need to sell off other stuff regardless just to be into this. GDXW, that one's great. That one's the gold miners weekly pay ETF from Round Hill. I'm surprised Costco's up, and then Apple. We got some Berkshire Hathaway is also up as well. I mean, that makes sense. We're going to talk a little bit about Warren Buffett in a bit here, but yeah, this is these are all the positions that finished green. And man, if you were in some of these inverses, congrats to you. You made the right move. Next is from Start Capital. It says Berkshire is cutting Apple for Google. So here is the news. Warren Buffett's kind of been sitting on the sidelines. He's been sitting liquid, and now it's made this big announcement. It says Berkshire Hathaway reveals $4.3 billion stake in Alphabet and cuts Apple. So Google is in for a wild ride in a positive way, and yeah, this is very bullish news for Google as a whole. I have a friend named Brian. He's actually doing some option trading, and he has an option trade in Google. So he's up big right now. He bought way before this news. Man, I'm really stoked for him. Then we have this one from Richie B, aka Wanna Be Fresh. It says pre-market was bleeding like the world was ending, and everyone ran around screaming doom. I told you the chaos would flip. I told you the dawn would bring a gap up. And once again, the market bowed to the god of degenerates. Mortals, panic. Chaos did not win. I did. Richie, god of dividends and degenerates. This guy's such a... man, honestly, man, I really wish I didn't have to sell my positions. It was like really hurting me to do it. I didn't want to do it, guys, but I had to prioritize the capital preservation. And even with the flip that he's talking about here, unfortunately, it didn't really matter. I would still be down too much. So I don't regret at all what I did. This is his previous post that he was quoting. He said the market downtrend is red today, unbothered by the government reopening, and humans ran about like frightened squirrels. But chaos is my domain, and chaos always swings back. I expect a gap up at dawn. Despair tonight if you must. but I'll be waiting as the bell, waiting at the bell. Yeah, this guy's just an absolute troll, man. I love it though, but like he's honestly one of my favorite people to follow on X, and he's a lot more experienced in this space. I like to pay attention to what his sentiment is, and that kind of gives me a lot of ideas. The last one from High Yield Hustle, it says, one thing I hate seeing on this app is people getting dunked on for $10 to $100 buys. Unless you're a trust fund kid, we all start out the same way. When you're starting out, your money doesn't compound, but your knowledge does. You're not getting massive gains, but watching the market move every day is priceless. I started off at 18 with a $50 weekly DCA. If I said to myself, this is pointless, then I'd be like everyone else contributing to a retirement account until I'm 65. The account might have been small, but those early years changed the trajectory of my life. If you just started stacking, keep pushing. I promise you those little contributions aren't meaningless. Keep stacking, but most important, keep learning. Become a student of the game. As the years go by, you'll realize your money caught up to your knowledge. And this is what I really wanted to highlight the most. I think a lot of you who are probably watching my journey, especially like if you're interested in growing such a small portfolio like I am, you often see, you might think that like the amount of money you're investing is insignificant, but I'll tell you the truth. You know, I didn't really start investing into even a 401k or a Roth IRA until a little bit later in my 20s. And that's a big regret that I had, because I had plenty of disposable income at the time of when I graduated university and started my career. I had plenty of time to do investing. And I just thought to myself, $10, that's insignificant, just like what he's talking about. Imagine if I let that compound up to where I am now, what age I am now, I would have quite a bit of investments. And, you know, I'd be in a lot different of a position than I am now. But instead, here I am, you know, having to invest a lot more on a monthly basis just to make up the difference for all those years that I didn't really take this seriously. And I hope this is encouraging. And yeah, right now, even me, I'm learning. Like, again, I'm not quitting. I may have exited my positions, but again, I do plan on getting back in. I do plan on continuing this journey. And, you know, I hope you guys stick around and continue joining me on this. This has been one of the biggest learning experiences for me in probably a long time. You know, I have a very successful career. I have a very successful business. You know, even me, after all those experiences that I've had in different industries and different investments, here I am still learning something new. Learning something about myself, most importantly. And then last, taking a look at the futures, we have S&P 500 is down 0.05%. The Dow is down 0.65%. NASDAQ is up 0.13%. Russell is up 0.22%. VIX is down 0.85%. So it's back at 19.83. And then gold is down 2.39%. And then it says Trump signs order to ease tariffs on beef, coffee, bananas, and tomatoes. So I think that's probably what caused a little bit of a small rally on Friday. And then it says USDA data casts doubt on Trump's China soybean purchase promise. Yeah, so these are really like everything that's been going on with this, guys. Anyways, guys, I hope you enjoyed today's video. I'd love to hear any of your guys' words of encouragement, any feedback, questions, suggestions, advice, wisdom. Drop them all down below. I'd love to take a look. I do my best to respond to just about every single comment on my YouTube videos. I hope you guys enjoyed this one. If you haven't already, smash that subscribe button. Please do. And most importantly, smash that like button. I would really appreciate it. It helps with the YouTube algorithm. And again, remember, I'm not giving up. This is just the beginning of the journey. I'm just recalibrating, rebalancing, and coming up with a new game plan moving forward. So with that all being said, until next time, guys, peace.